But the bottom line is, you just look at past pivots. So one of my targets on Bitcoin in this bear cycle is.
So the crypto and financial markets are still in a rut right now. While Bitcoin has risen above 30K, many traders still feel that we'll never be able to get out of this consolidation period. This is why we need to look at this recent interview with Gareth Soloway, the founder of IntoTheMoneyStocks.com. He recently gave an interview about Bitcoin, and he talked at length about where we're headed from here. Welcome to another video from Power Finance. Before we look at his interview, I'd just like to remind you that we're giving away $1,000 to a random subscriber. All you need to do is like this video, leave a comment in the comments section, and subscribe to our channel. Good luck. Now, let's take a look at his interview.
So I love when we talk about charts, right? So we were just talking about bear flags, and this was just a beautiful one. And it's so interesting to watch how sentiment changes. But basically, for those of you out there watching, you can see how you basically had this vertical move down. You had a little bit of choppiness sideways, but for the most part, it was straight down. And then what you did was you started to go sideways to slightly higher. And this is a bearish flag consolidation pattern. And so even when we were up at these highs, there were a lot of people getting bullish, talking about breakouts. I actually was shorting it up here because it was at the upper end. And you can see the beauty of the chart here with the exact high here matches the high here, which matches the high here. And then look at the lows, perfectly parallel line right down here. Now, eventually this pattern breaks down. That's exactly what it did. Now, what's super interesting about this chart is that if we take care, let me remove this. There's a new channel that we hit, and this is a very short-term kind of thing, but this is why I actually bought Bitcoin recently. So you connect these highs. So again, this high right here, and then back to this high. Drop that perfectly parallel line down, and look at what you get here. So now you have a chart on Bitcoin where you just when it was panicking, when UST was failing, when Terra Luna was collapsing, look at where the price of Bitcoin went, and then look at how it started to bounce a little bit. So the thought process for me in the near term is that since you had a big move like this, you had a big move like this, you had a big move when it crossed up here and so forth, it makes sense to think that we should have at least a decent move back here, which actually, interestingly enough, you were talking about your retrace play. This actually could be a trade that you take where remember the parallel lines I had here?
Yep.
So this would be a great shorting opportunity if price goes right back there after the breakdown.
38
so that
to
would be
40
just a
grand.
very cool setup potentially. But right now I am long, and as long as this lower trend line holds, that's what the chart's telling me to do. Just be long. And again, not a lot of my portfolio. I'm not leveraging out. I'm not trying to make $1 million overnight. Real wealth is like a marathon. It takes time to build versus a lot of people take $5,000 and they're like, okay, well, how do I turn this into 100,000 by next week? And inevitably you have to take so much risk, you're going to lose it, right? I mean, maybe you win a couple times and then boom. So we can see it's obviously had this double. I mean, this would be just looking back on it, a classic double top, which basically looks like it coincides, almost with the Bitcoin chart. Well, not quite. It looks like it hit the high a little earlier than Bitcoin. Then it bear flagged right here, right? So this was another kind of same sort of pattern, the breakdown. And then basically, I mean, again, my chart's only going back to like late 2018, but it looks like you're right kind of on major support right now. So as long as basically when I'm looking at this chart, what I'm seeing is that, okay, well, you're right at this low. As long as you hold this $50-ish level, it's okay. Now, if it breaks that, that's where you need to start to get a little nervous. That's where I would start to say, because I don't have any more data below this. So it's like, it's not like we have a low down here where we could say, okay, well, it's going to go down to 45 now, right? I have nothing below here. So, but right now it is at support though, no doubt about it. Just trade where I like to trade right now. I mean, I think Qcoin is good. I know you don't get the same kind of, if you're in the US, you don't get the same sort of coverage as you do outside of the US, but you can do there. I have accounts at Kraken, Coinbase. I've been looking into Bybit, but I don't think you're allowed at this point. But I've been in contact with them, and they're talking about allowing US customers potentially, eventually, they're going to get approved to be. So I mean, I don't really have a specific favorite. It's just one thing I will say is that I like to spread my money around. Now, if you have a very small account, it doesn't make sense to do that. But because crypto accounts aren't FDIC insured, I strongly encourage if you have significant money to spread it out, because I had this happen to me, and this was it's one of the craziest scenarios. But someone jacked my SIM card, so I was actually on a family reunion, and all of a sudden my phone stopped working. And luckily, I was like, okay, this is weird. Let me call the phone, the provider. And it turns out someone just like basically became me, switched my SIM over, and then they were getting to password reset. They were getting all the codes to the phone, their phone. And so they got in, there was one account they got into, but luckily I hadn't funded it yet. But it was like a wake-up call saying, all right, listen, I mean, if these type of things, I mean, you could click on a link where someone, takes over. I mean, there's so many things. Now it has hit resistance. You can see my trend line up here, classic pierce of a double top, and you are pulling back. But still, people have to remember that in fear, the dollar is still the dominant currency in the world. And so people are running into it. When Russia invades, when there's fear about a global recession, the dollar is where people go, gold to some extent as well. Now, going to commodities, I'm a huge fan of gold right now. I think gold, again, continues to be the best performer. The gold chart is such a cool chart to look at. All right. So number one, you had a major, this is the daily chart of gold, and you had a major breakout, right? So here's your top from 2020, all this sideways consolidation. Here's a high pivot. There's your breakout. And here it is, Kurt. You know you love this play.
Ta-da.
Is that just is that a perfect retrace to the scene of the crime? The retrace to the trend line?
Yeah.
I mean, that's a thing of beauty right there. So again, gold behaving exactly like it should. Here's your double top. Look at this. So it went right to the double top, which is resistance. Then it pulls back to the scene of the crime here, which was the breakout trend line. Now it should begin its next move up. And I still think the rest of the year, gold is the best performer compared to Bitcoin as well as the stock market. Now, one more thing I want to show you guys, and this is just such a cool thing here. Bear with me as I erase this. So if we look at the chart, and this is going to set you up for why I'm so bullish on gold, think about what we have with inflation right now, and when was the last time historically that inflation was at 8, 9, 10%? And the answer is in the 70s into the 80s, right? 1970, 1980. So what I want to show you here is this kind of setup here. You have this big move up here. All right, this is from 2018 to 2020. And then you have 2 years of consolidation in the upper range, which is bullish, before the recent breakout. Now, what we want to do next is let's go back. Let's go to the weekly chart here and go back to the 1970s. And I want to show you this. So here you have almost the identical chart playing out where you have 2 years up, 2 years of consolidation, and then the breakout. And then what's amazing about this is, I mean, look at where this thing goes. I mean, look at this run on gold. You basically went from the low of $100 down here to 900. So again, I mean, those are like Bitcoin crypto numbers.
I was going to say, right. These are moon boy numbers.
I know. And listen, I'll be the first to say, I don't believe it's going to do an 8 times, 9 times type move, because Bitcoin does take some of that money away.
Sure.
There is, people that are diversifying in other things, but is it possible gold could go to 5,000 in the next couple of years from just under 2,000? I mean, I think so.
Yeah,
it makes a lot of sense with the inflation the way it is. And also, not to drag this on too much, but keep in mind that the Fed will ultimately go back to printing money. I think there's always been an allure to gold. I think, history has shown that, through thousands of years. But the question is, will future generations hold it the same way? That's a good question. I think at least from my investing career, it will be. I don't know in 100 years. Part of me also is like, well, listen, I'm holding physical gold right now, but when Elon Musk starts mining asteroids and there's unlimited amounts of gold, do I really want to hold gold at that point? Right. That's probably not in my lifetime at this point. Well, maybe late lifetime, but I will tell my kids to just be aware of that if I pass it down to them. So I think that, yes, it will have its place. People still want to buy gold Rolexes, gold this and gold that, but I don't know if it will be the same level of hedge as Bitcoin gains dominance as the digital gold. When I'm looking for swing trades, which again are days, weeks, maybe a few month type hold patterns, then patterns on the daily chart are going to be optimal. As you go to a bigger time frame, you're going to get a pattern that will play out over a longer time frame. So for instance, if I say to myself, hey, I want to find out, let's look for what's going to perform in the next 6 to 12 months. I'll probably look for like a bull flag kind of set up on a weekly chart. Yeah. So with tops, like you said, it's very hard because, we are human, right? So even when I was saying when we were trading up in November and October that, hey, I think we're going down, it was hard to make that case. I was questioning myself because I mean, everywhere you looked, people were like, oh, like, there were a couple big players that had been right for multiple months about price targets and they were calling for like 100,000 by the end of November or whatever it was. But yeah, the bottom line is one of the things that really told me about the Bitcoin one, number one is the 4-year cycle, right? So 2009 to 2013, 2013 to 17 to 21. The second thing was one of these techniques, and I'll show you guys this one. This is a pretty fun one. If you take your April high here, which was right around 6,500, and draw a parallel line right across, what you can see here is that you only got one close above here and never a higher close. And over here, you got one close above this trend line again, never a secondary higher close. Same thing right here, barely closed above, and then obviously the rest is history. There's something called the confirmation signal that I developed, which is basically requires a chart to be a true breakout. You have to have two consecutive higher closes to really confirm the breakout. And one of the reasons that stuck out to me that it wasn't happening is, you know, you had the Bitcoin futures ETF launching. I mean, there was so much hype and so many small investors were jumping on board, and, you know, the targets were going nuts. So why wasn't Bitcoin ripping higher through this level? And the answer is big money must have been selling into it, right? I mean, when you see all the masses bullish and it's not breaking and holding, then that should be a signal. So whether you saw the signal here or it took till over here, it doesn't matter. I mean, that's still way higher than it is now, but the signs were there in a chart. Now with bottoms, same kind of thing. What I've always found is bottoms, stocks will go or charts will go up higher than you think they will and lower than you think. Certainly, I think I started buying Bitcoin when it got below 10,000 and kind of averaged down from there. So I wish I was paying attention to you back then for 3,000. But the bottom line is, you know, you just look at past pivots. So one of my targets on Bitcoin in this bear cycle is the 20,000 level. Now, I know a lot of people will tell you that, oh, we've never seen the previous high pivot in a crypto tagged. But at the same time, in a bear market, you've always had 80 to 85% correction moves. So one of them is going to be wrong, right? So which one is it? So the high target I have on Bitcoin is 20,000 right here. My low target is 12,000. And I'll quickly go over how I reached that. And again, not to scare anyone, right? But basically what you have is what's called a measured move in technicals here. So what a measured move tells you is that you take the long drop from here, then you get all this consolidation and you match out that same distance here. So this distance should be equal to this distance, and this gives you 12,000. Now, what's interesting about 12,000, you could say, all right, well, that's just one method. Why is that important? Well, take 80 to 85% of 69,000. What do you get? 12,000.
Interesting.
So it's just kind of little things that coexist together. They start to kind of be interesting.